we're coming with a new story in the market, even though the company is not new. We have been listed for over a year now. So this is a cautionary statement. I'm going to make lots of forward-looking statements on this presentation. And I hope that everybody will realize of the potential and who is behind this company. So Baroyeca is a company that is focused in Colombia, and we have two projects at the present time. We have the flagship project is Atocha, which is located also in the core of the Santa Ana Frias Colonial Silver District, same as we're neighbors to Outcrop Gold, the previous presenter. And then we have the Santa Barbara project, which is a gold project located in what is called the richest gold belt in Colombia, which is the Serranía de San Lucas. The Atocha is a single mining title, is 2,600 hectares. And as I said, it's located in the richest primary silver in Colombia, and is a colonial district with a proven silver history. We got high grade to bonanza grades in the order of hundreds to kilos per ton silver and silver equivalent in rocks and now in drill core. And the property hasn't been historically mined. We're surrounded by colonial mines, but we don't have any single colonial mine or past prospect within our property boundaries. So everything that I'm going to show here is a pure discovery. Within the property boundary, to date, and we only covered about 30% of the property, we identified over 30 kilometers of vein strike length proven within, and the rest remains unexplored. We didn't have the time to prospect the property. Santa Barbara is a different thing. Santa Barbara is also narrow vein, high-grade gold in a different environment, in which the company has a pilot processing plant, and we're following the model of drift for grade and drill for the structure, but we haven't started drilling, so we're drifting. We tried to tunnel for the entire length of a chute and process that into small batches as a giant drill hole and prove the cash flow potential, non-diluted cash flow potential, as well as a bulk sample. And we completed a milestone of a 500-ton bulk sample on this vein, on this property, not just a 1 ton or a truckload of ore. We actually completed 500 tons over a year. So all our projects are underexplored, they have very high potential, and they are all near or within infrastructure. Our management team is all experienced in precious metals, and we bank on our team in Colombia. That's what we're more proud of. So the key management and directors in the office, myself, I have 20 years of experience. I've been working in Colombia for the past 10 years in different projects, different companies, evaluating projects for clients. I founded Condor Precious Metals in 2010. We were the first owners of Santa Ana. I was chief geologist for Red Eagle for a period of time, and then I decided to go independent. Founded the company Malabar Gold Corp, and we were amalgamating projects. I've been involved in other companies here in BC, all over Canada and Latin America. Rick Wilson is our chief executive officer. Rick has been involved in the resource, and he was in Baroyeca from the very beginning, 15 years ago. Doug Eckert also comes with Baroyeca. Marta is our general manager in Colombia, 20 years of experience, lawyer. And here we got special advisor John Robbins. Maybe you all know him. He's founder of the Discovery Group, and is sharing the biggest story of the decade in Canada with the sale of Great Bear Resources that was announced last month. So John is heavily active in Baroyeca. He was with us in the property in November for the Colombian Gold Symposium, and actually is coming with me next week to go again to Atocha and to check some other opportunities. We got Paul Harris as well, newsletter writer, is the organizer of the Colombian Gold Symposium. Our share structure is really tight. Right now we have about 38 million shares outstanding, fully diluted 56. Management owns about 20% of the company, and executives and management, we got with stock options, we got about 25%. We, management, participated in all private placements of the company at all prices, and we raised over $4 million in the last 15 months. So we're still very well funded, and our market cap at 33 cents is about $12 million. So let's back to the projects. So in this slide, you see the Atocha property related to the Santa Ana Colonial Silver District. As Joe in the previous presentation, he pointed out, is the richest colonial silver district in Colombia. So I don't want to repeat myself a lot on all the historic merits of the property. North of us, near the town of Falan, is the mining center, is La Real de Minas de Santa Ana, which is a colonial Spanish mining center, and then remined by the British between 1800 and 1832. To the west is the Frias mine that operated from 1870, 1880 to almost 1902. And then to the southwest is the El Gran Porvenir mine, is a very famous mine in Colombia, privately owned. And it actually is a very good example of how these vein systems and how the overprints, how all the different events all together combined are the result that this district is being put in the map as the richest silver district in Colombia. So we've got the largest mining concession by size, 26 hectares of continuous mining concession. Colonial history grades up to 10 kilos per ton silver. That's reported in concentrates from the British and the Spanish colonial records. We know that the structures produce clusters of very high vein density. So there's geologically, I can be talking for hours about this because I've been working in the area for over 10 years. And we got precursor orogenic thrust and fold. Is a hybrid of thrust and fold orogenic primary systems. They get reactivated by a tangential oblique shear system. So we're in the fragile ductile zone that produces more permeability, re-enrichment, and then comes 1 to 2 epithermal late events that are introduced in the gold. So the mineralization, the orogenic, is old, and in the area, we got the Mesozoic, Jurassic batholates to the south. They are responsible all the mineralizations near Ibagué, La Colosa, Las Animas, all those mines to the south within the granite. And then in the area, we see immediately west of the northwest corner of the Atocha property, we see that orange elongated body. That's a Latillo granitic stock. Those are Miocene, and more recent to that is cross-cutting epithermal veins that remobilize probably the gold and the silver. In the image, you see a rock, picture of a rock. What is key here is this is an orogenic vein, white quartz with all these black stripes banding, so it tells you the direction. But you see coarse grain silver patches that are actually filling a late fracture that goes almost perpendicular to the vein itself. So that tells you all the remobilization. All this huge silver content is coming late and is precipitated not as sulfides, but in the native state. So for a metallurgic purpose, it's very clean. In our property, we got samples that return up to 3.5 kilos per ton silver, not silver equivalent, but silver, with places with very high grade gold, up to 1 ounce per ton gold. So in 2021, Baroyeca followed on 3 large vein corridors, and they added up to 30 drill targets to date. And they still, at that time, more than 50% of the property is not even prospected or explored. So we got our drill permits in October, and we started drilling in mid-October, and the program is still underway. So this is a section of the Frias mine, so I don't want to repeat that. It's a single shot, historically mined to 320 meters, but this section is from 1902. So you look at the depths are in fathoms, and it was all concentrate. It wasn't any other processing method that people are sorting the ore manually. And they were producing concentrates of up to 350, not grams per ton, but ounces per ton silver, which is over 10 kilos per ton in the concentrate, not even accounting the gold. So this is a little bit of the northwest corner of the property, even though there's more showings that we have on the west and the south, but accessibility-wise, we access the property by a road on that corner. Veins are exposed in there. And if I show you a map from 6 months ago and a map from now, you'll see a couple clusters of purple dots, which indicate over 1,000 grams per ton silver equivalent in there, to all the ones that we found now. And the reason why it looks like everything is concentrated in this corner of the property is the more we go to the field in that area, the more stuff we find, and we don't have the time to move to other areas because we cannot leave that area unless I got a special crew dedicated to the other side of the property. So on the drill one, the phase 1 of drilling, we started at Laye. Why Laye? Laye is right by the road. Every drill pad is 20 meters from an existing road. The veins are exposed at surface. We got very good reference. We got mapping, and we're not focusing on one vein. We want to focus on a vein system that produces a cluster of several veins. So this is a little bit of the current drill plan with the results to date. So we started in the upper part, holes 1 and 2. We get up to 2.2 kilos per ton silver equivalent plus 300s. Then we got 1.1 kilos per ton equivalent on the second hole. And then consistently we see that several stacked veins are showing up, particularly in the shallow part of hole 6, 3, 4. And then the system is getting more robust and well formed to the southwest. So I say like holes 8 and 9, assets are pending. Assets are coming from hole 8, but I can disclose that until we do the press release. And the hole number 10 is in progress, but I can anticipate we're really excited. That hit the vein system yesterday, and we got the longest intersection to date in the program. We got about 8+ meters of vein breccia, almost true thickness. And the veins, as you see in the lower part of the image, is the quartz, is the banded sulfides. It's the same style of mineralization as the rest of the Santa Ana free, as to all the way to El Porvenir, hosted in the schist and the Cajamarca district. The other project is Santa Barbara. Santa Barbara is something different, and I want to go quick on this because I see the time is coming out. So we got 320 hectares. We got 2 properties. Actually, the southern property, we announced an LOI for the acquisition in December, and we are signing the definitive agreement next Wednesday in Colombia. So I'm flying out on Tuesday to get that one done. We are next to a special reserve area of mining with numerous active scale miners in the area, but we don't have any on ours. So we don't want to have that problem. Our chip samples are, most of them averaging 10+ grams per ton gold, almost to an ounce. And on the tunnel that we created for the bulk sample, that goes for 120 meters and still open, we just stop it and we go in a cross cut to try to access a second vein. We got channel samples up to 102 grams per ton gold, which is worth 3 ounces, but all of them average 38 grams per ton, which is over an ounce, which is very exciting. So we completed a 500-ton bulk sample, and the average grades, the head grades, that include dilution of the dirt that we get from the wall rock when we collect the samples, all average 24 grams per ton gold on that. So we were more careful collecting the samples on vein number 2 when we accessed that, and we opened 18 meters of tunnel. We channeled that every 1 meter, and we got the highest value is 60 grams per ton, but they all average 31 grams per ton, 1 ounce per ton consistently over 18 meters. So all those veins are very similar. So here's you can see the access on the right hand side of the image. That's the main road, Rio Viejo to Barranco de Loba. All the infrastructure, all the road that goes to our processing plant site is privately built. So we build the roads. So it's all our access. Our exploratory tunnel, we started it. We're not using something that was pre-existent. We went there from scratch. We opened that as a location of the channel samples, the crosscut, vein number 2, where all those grades are. And then you see all these other parallel vein systems to the north, all of them. And as you see in the chart, all numbers are above 10 grams per ton. This image is the vein within the tunnel, which is heavily loaded with sulfides. And it tells you the nature is all high grade and hosted in a basement maze. This is all how it looks. And this is a summary of the channel samples. You see vein number 2, 33, 60, 14, 36, 49, 43. Really exciting numbers. We built a custom processing plant, so we're not using any artisanal pre-existing equipment that we're refurbishing. We actually got a custom-built, tailor-made processing plant, which is like a giant lab, 2 stages of crushing, 2 stages of milling. We don't have any flotation or gravity separation circuit. So as the sample gets to the crusher, ends up in the cyanide leaching tank with no losses of material. So when it gets into the leaching tanks, can be considered homogenized. We take the head grade sample, and then we do individual pours for every 10 or 15 samples, and we can cross that reference with the head grades. So we know the head grade and we know the efficiency of the plant, how much we can recover. So that's a little of the flow sheet of the plant. This is a summary of all the different batches. One of the things that I like is we're not looking at the negative effect. Gold in the property is less than 50 microns in size. So it's all called the chemical gold. And our average is like 20 grams plus minus 10% in every single 10-ton batch, as you can see here. So we process 505 tons, average for 24.5, and silver 56.27. 30 seconds. I want to compare that to the earliest stage of Baroyeca with the footprint of the size of our property. Continental Gold in 2011 released 3.1 million ounces and 11 million ounces of silver from what you see in the image in the middle, comparable 500-meter long veins with a system of not that very many. And this is taken from the economic geologist, 14 individual veins with the 2 bigger, better defined, Murciélagos and San Antonio. They're spaced less than 50 meters, and individual vein thicknesses vary from 3 to 20 centimeters. We're not looking at bigger veins. Sorry, Greg, I'm going to probably pass 1 minute on my presentation time. So in a similar scenario, Continental grew bigger to 15 million ounces in 2015. Now, what we're doing is a similar thing that they did when they started. They got the first, the Murciélagos or the Yaragua vein for 500 meters. They got a 30-ton per day plant. And they were cash flowing from that operation to get non-diluted cash flow to start the exploration program. But also is to me, in this kind of veins, it's better to define rather than drilling in the initial part of the exploration programs. What the company wants to be different than others is if I can process these batches of ore, and I can do 3-4 batches a month at 20 grams per ton, just the bulk sampling over a year will produce enough positive cash flow, non-diluted, to keep all the overhead of the company. So I don't have to raise money to keep the lights on, pay for payroll, etc. I only need to raise money for Atocha. That will be the idealist scenario. So we can self-fund exploration just from the bulk sample. Quickly, we are very proud of our social programs at Atocha and in the area, and this is the path forward. We want to raise 4 to 5 million in the short term to find an aggressive program at Atocha. We want to keep it ongoing and continue exploring favorable structures. And the most important thing, we want to evaluate and acquire a third project in Colombia. So this is a little of the budget, and if anybody has more questions, I was very fast in the last part of the presentation. Please feel free to contact me.